All right. What's up, everyone? Welcome to another live session. Today is Friday, October 30th, 2020. Um, October flew by, and what a month has it been? See the dollar index just surging, and we have a lot of stuff to talk about, but mainly it's all going to be predicated around the US dollar going into the election, after the election, all the possible scenarios, and how the majors will react. So that's what we're going to go over. And obviously, this week's pip count will be updated on our website, like it is on every Friday. And so let's get to it. So this upcoming Tuesday, is the election in the United States on November 3rd. And there's a lot of mail-in balloting, so we won't know a definite answer until later in the week. We'll know an early answer, so they may say Biden won or Trump won, but they'll have to count all the other votes that are coming in to get a final answer, right? So I have an article that was pretty nicely written on how the markets would react to the different scenarios. And so if you look at this prediction right here by JP Morgan, you'll see something. So an orderly Trump win on November 3rd would be the most favorable outcome for markets, JP Morgan analyst wrote in a note to investors. Equity markets could see a 12.6% boost if Trump reelects himself, right? But then you have another opinion as well, where if Biden wins, it's a neutral tone. So if you look at this, that while the initial knee-jerks to a Democratic win would be negative, so let's say if they do announce Biden will win, markets would dip for a brief moment, but they will stabilize because of the Biden administration and possibly getting the pandemic under control. So it's hit or miss. I think a lot of companies would appreciate the lower corporate tax with Trump, but who knows how the dollar index will react. Right now, Biden is favored, I think, by 7 in the national polls. Again, these are just surveys; these aren't actually the actual polls. But based on that, this week, the entire week, the dollar index just surged. Right, it has been very bullish, and I think it may continue going higher. But based on this analysis, I do think that if Biden gets elected, the dollar index would eventually get up to this high. This is our overall target for the dollar index for the foreseeable future at 94.75. Earlier in the week, we started off over here bullish. We were expecting price to go from around here to up here, which it did. I actually broke above, retested this kind of area, and then surged up to these highs right here, where it's kind of stalling. So I think if Trump wins, we will pretty much rocket to this level. I know the handling of coronavirus was a bit, underwhelming, and all the stuff that comes with Trump. But you do know the economy usually excels with Trump. And if you look at the unemployment in the U.S. compared to all of the other G7 nations, America's doing the best. Their unemployment has come back down to, decent, respectable numbers considering there's a pandemic going on. And also, if you look at the GDP numbers from yesterday, they're also pretty nice. So if you look at today's fundamentals, on par and bullish, which is nice. Consumer confidence, sentiment is also very nice, 81.8. Chicago PMI came out bullish. And then if you look at yesterday's GDP numbers, advanced GDP 33.1%, less unemployment claims filed, 3.6 the advanced GDP. So all those numbers are really, really good. I'm pretty sure the mainstream media won't talk about it. They usually don't give Trump credit, for being fair to the guy. So he knows how to run an economy. So if Trump wins on Tuesday, if it looks like he's winning, I do think the dollar index will at least surge back up to 94.15, right? This kind of region right here, resistance/support region. I think that's where price will go. So this is the initial reaction to the Trump re-election push up. You can see right now price action went up to 94.105, pulled back, and now it's printing hammer after hammer. Usually that's indication that this is a pullback candle, and now we're ready to go higher. The previous 4-hour candle was a nice bullish hammer, so I do think that's an indication we will be going higher. Today's Friday, so don't expect much. Maybe we may have some movement Sunday, and then come Monday, that's when the predictions will tighten, they'll become more accurate. But we have to remember, if you guys remember 2016, the Monday before the election night, right? Hillary was favored 93% to Trump's. I believe Trump's had. I think he had a 9% chance of winning. Yeah, so Hillary had a 93% chance of winning the election. Trump had a 9% chance of winning the election, and then the next day, Trump ended up winning. The reason for this is because a lot of Republicans, they don't do mail-in ballots. They like to vote on the election day. I don't know if it's just patriotic, whatever it is. So a lot of the numbers early will favor the Democrats. So if you're looking to trade this, this event, which I don't, advise people to do, make note of that, because these Republicans, they vote in person, and those will take a long time to count, obviously, in comparison to the early voters, right? So when it's all said and done on Tuesday night, I think a bullish reaction will be happening if Trump gets elected, with the target of this 94.15. And while I go through this, if there's any recommendations, send them through on Discord or YouTube. But I think this is really important, because if you don't know where the dollar is going, then you really don't know where the markets are going. So that's where I see, and maybe for Biden, like I discussed, with Biden, I think we're going to go a bit lower. So what we can do with Biden is, if we're still somewhere around here, come Monday, come Tuesday, I think we'll actually dip. We'll actually dip for a bit. Dip back down to maybe this low that we created this morning, right? You can also see that low is also this previous significant high, so that there's some sort of confluence there. We'll go here. We'll consolidate. Once it's confirmed that Biden's winning and it's a done deal, then we'll push up. Okay, so those are two reactions. In the end, I think the dollar will benefit regardless. Just having this election past us, and so that whoever's in office can focus on coronavirus, taming it, and getting the country back on track, whether it's Trump or Biden. So even the technicals could have told you what I've just said. If you look at the daily time frame, since September, we've kind of entered into a descending channel, and we broke out with huge amount of significance. I think we'll go higher, and then price can obviously reach these highs right over here of September. And you have to recall that we've been selling off for the dollar since up here, since the inception of the pandemic, since the lockdowns began. The dollar just sold off, right? It just sold off because of the safe haven. So everyone went to the Japanese yen, Swiss francs. Also because the U.S. handled coronavirus terribly, and all those factors led to the depreciation of the dollar. But we do have this long-term support. This is going, way in advance. But I think this is my prediction for ending off the year. If you look at the monthly time frame, and just to show you, I'll actually pull up a different chart just to show you a more clear image. Right, if you look at the monthly time frame, I'll quickly jot this down. Where we have a resistance zone here, and then we have this support zone here, right? And so if we look just based on this long-term picture, you ask a beginner or an advanced trader what they think what's going to happen, more than likely they're going to tell you that it's going to go back up to here, right? That's just pretty much common sense. And I think that's what's the monthly candle. It's a nice bullish hammer with a very long way to the bottom. That's one of the most bullish candles you can see. So I do think all signs are pointing to the dollar ending off the year on a good note. And a lot of it depends on how well we control the second wave or third wave, whatever wave we're in of the COVID-19 crisis. But technicals, fundamentals, I'm saying bullish. So because of this is why in yesterday's session I talked about swing shorting euro and gold and all that jazz. So if we pop back to our original chart, this is what we have, right? We should go higher. You can put your zone here or up here. I guess recent price action actually favors this, and there you have it. So we don't typically trade Sundays, and we don't typically trade Mondays unless later in the day. But if you need any more reason to not trade the night before election and even during election, there it is. Even the top analysis in the world aren't even sure what the reaction will be. One says Trump win will be bullish. One says Biden win will be a bit bearish. But in the end, they should both favor the economy. All right, so now let's look at the setups that I wanted to talk about. And the first one is Euro. I think Euro, it's time for Euro to come back down to earth. So if you look at the long-term picture for Euro, what has happened. So if you time it, right, here's March. So we talked about in March, the dollar index went down, and guess what Euro did? It went up, right? No surprise there. Since September, right? Since September, actually since August, going into September, we've tried to go higher than 1.20, and we could not. And now price is dipping lower. I think price is going to go short. If you look way long term on the monthly time frame, we have this downwards trend dating back to 2008. We have a touch here. We have a touch in 2011. We have a touch in 2014. We have a touch in 2018, and then finally this year we broke above. That's primarily because the dollar became so weak. That's why we broke above. We can see since then price is inching to go back lower, right? And so if price can close within this trend line again, we are definitely going back to the lows we made in March, and then even lower to this long-term support at 1.03. So that's what I have for Euro. I'm not looking at longs at all. I think the short is the best bet in my opinion. If you guys remember, in December 2019, I gave my bold predictions for the markets for 2020. I called gold 2000, and that happened. I called Euro short to 1.05. That almost went all the way. I think we were off by 100 pips, but we were already up around 300 pips at that time. And so for Euro, even the price action, you can just pull up a different chart, clean chart, and you'll see like we're looking to go lower, right? There's no other way to slice it. At the current moment, obviously things can change on election night, but this is what I think is going to happen. So just based off of this, we have created, lower highs, lower lows, lower highs, lower low. This wasn't a lower low, but we are creating successive lower highs, and this is definitely a lower high. If you look at this month's candle, it's a nice shooting star, inverted hammer, spinning top, whatever you want to call it. It is one of the most bearish candles there is, so I think Euro will make its way down. Now, in terms of entry criteria, it's pretty simple. So back in September, when we tried to sell off, we came and made this low, and then we immediately reverted back, right? We reverted back, we had some choppiness, for a few weeks, and then price finally broke out with a stronger dollar. Now, all we need is a daily or weekly bearish closure below 1.16150 to go short for Euro, okay? That's all we need. Right, it needs to be a nice bearish closure, either an inverted hammer or a candle with 0 wicks top and bottom, and then we can take this trade. So 1.16150 is a level you need to watch out for. This is a 3.39 R2R setup, so that's really good. And yeah, that's what we have for Euro. A huge short down, and I think all the time frames support it from the higher to the lower. And I think until Tuesday, or maybe even until Monday, this will stay consolidating. It's going to stay that way. I think it's going to be consolidated until Tuesday, where it's going to go a bit haywire. And you know what? That's what's going to happen when you have an election, especially when it's the U.S., which is pretty much the safe haven currency. And right now it has its thrown back, right? You have to give its credit. The U.S. dollar, at one point, it looked like it was going to go all the way to the 80s levels. There was a point in time where we were predicting that we could drop all the way down here, but it used support, it found its ground, and now it's looking to go higher. So that's what I think about Euro. Honestly, guys, out of all things, maybe trade an NFP here and there, maybe trade unemployment data. But trading an election, that is a different type of crazy. And I'm usually not judgmental, but just because I don't want, accounts to get blown, slippage to occur, I'd rather have us be on the safer end. GU, since someone asked, we'll do GU. GU's been a bit of a bore recently, but I'll try to give my opinion anyways. So long term, it still looks bearish to me. We've been ranging for a few months now, actually, since 2018. If you look at it, this is on the monthly time frame. So if you look, you can kind of see, this range. And this should be easy to trade long term. Based on this range, we are headed lower. It does make sense with a stronger dollar that we do head lower. So let me just clean this up and we can kind of get an idea. So here we're going to draw our little resistance zone right here. Some resistance zone action. Some support down here. I mean, trade the Super Bowl. Trade the Super Bowl. Trade the NBA championship. Trade the the PGA Tour. But trading an election, that's a different kind of beast. Especially with voter fraud going on, and I know Biden and Trump are going to be going off on Twitter, making horrendous claims that could definitely affect the markets. But anyways, the weekly time frame can kind of clear it up. We have kind of a triple top. Not a huge believer in triple tops and double tops unless there's more confirmation. But if you look, you can see why I'm not been a fan of GU. It's been so choppy. So if you look at these weekly candles, these are weekly candles, right? You're having flip-flops. So one day it's bullish, one day it's bearish. I mean, 1 week it's bullish, 1 week it's bearish, bullish, bullish, bearish, bullish, bearish. There's no real trend like we've had in the past. For example, this is even a decent trend as we're still inching lower. But for the most part, it's been pretty rangy for the past 2 years. We've had, for example, consolidation like this where it's not doing anything. So GU, in the grand scheme of things, it should go lower. Obviously, right now we're consolidating, but we're still inching up higher. So that's something to watch out for. Let's take a look at the weekly time frame in terms of recent price action. One thing I'm noticing is this high and these two highs right there. I'm going to mark that. Right, so we do have some sort of resistance there. Obviously, price wants to go above that. If you look at the candles themselves, here we have a bullish hammer, doji, inverted hammer, bullish hammer. So indecision, that's pretty much what you're getting right now. And then if you look to the left, you can kind of see we have this area right here where price either stalls, uses support, and then or goes higher. So right around here. Right, so we have this area, and if you want a specific price point, 1.26700. Okay, 1.26700. So those are two weekly levels. We're trading between 1.26700 and 1.31700. So 500 pip range. And here's the daily. So on the daily, you'll see actually last week we went up to this level. This kind of minor resistance. We rejected and we sold off. But in terms of price action, we're still making new highs, right? We're still making new highs. And actually, this week's higher low hasn't cleared the previous week's lower low, right? For example, this is last week's lower low. This is the next lower low. This is the next lower low, and this is the next lower low. We haven't cleared any of them, so to call it short right now is a bit premature. With euro, it looks clear as day. It's a short. With pound, it's a bit different. Obviously, they still have Brexit talks going on, so that's a different factor for them. But for me personally, I wouldn't be looking to short GU until we clear, this low at the bare minimum, which is 1.28700, or if we make our sweet short all the way down to here, right? So if we can clear 1.26700, then we can short and take a very nice trade like this. Right, somewhere down into this area. You can kind of see, looking to the left, whenever we come from above and we break this level, eventually price makes its way down, right? Whenever we come from above, we eventually make our way to this level or lower, obviously. That's what happens. Again, when we come from above, price does make its way down here. This time around, it went around 90% of the way there. That's a lot of pips. So with a stronger dollar, I'm just predicting a short for GU. If it doesn't get to these levels, then it may continue going up, or it may just consolidate, be choppy. But this is like a long-term play, a surefire play where you're looking at everything in the grand scheme of things. You're filtering out all the noise, and I think that's the play right here. EU down, GU will eventually go down, and I think that's the brief outlook for it. We can obviously change our outlooks Wednesday morning once we know about the election. But for now, for the time being, based on the ranges, based on price action, based on the dollar, GU should eventually make its way down here, okay, to this lower half of the range. Right now, in the top half, we're kind of trading in the top half, right? We need to make our way down to this bottom half and then make that profit down to here. I want to show gold before I do any other pair recommendation, because gold had a really nice setup that is very similar to this. So here's gold, and again, we'll go to the monthly. So this was the previous all-time high for gold, and back in December 2019, I predicted gold would go to 2,000, and it definitely did that. It actually went to 2,070. You can check that video on our YouTube, and we just looked at it from the long-term perspective, based on gold and then based on the dollar, and then we put those two things together, and we had a prediction. So if you look at December 2019, that was this month right here, right? We called it right here, and since then, gold just shot up like a rocket. Now I'm thinking we're gonna go lower again. The worst thing for gold is a strong, prominent dollar. If, for example, Biden or Trump gets into office, right, and they control COVID, and they enter in the new year with less cases and a possible vaccine, gold is going to go down. A vaccine is the worst news for gold, because gold is probably the oldest gold stand. Gold is probably the oldest safe haven there is, right? I mean, currency is not even backed by gold anymore, because we're printing so much. But gold, at the end of the day, countries like China and Russia are stockpiling gold because of the dollar's depreciation. So I think on the weekly time frame, you'll see that we're making these lower highs, lower lows, lower highs, lower highs, lower lows, lower highs, lower lows. We could make a new lower low here. This week we sold off pretty nicely for gold. If you pan this out, you'll see why we're entering where we're entering. We'll have to go on the daily time frame for that. So on the daily, this is the all-time high for gold, 2,076.75. And then what happened was price action came to this previous low, right? It's right at 1862. And instead of breaking and closing bearish below it, it did all these wicks. So it made these wicks, these lows, and then price jumped back up. So we basically marked that area right here, and that's why our alert is at 1847. So what we want is either a daily or bearish closure below 1847. Okay, and that's where our alert is. Once we get that, I am pretty confident that gold should go lower. This is a huge mega swing trade, so the stop loss is substantial, but this is a huge amount of pips up for grabs. So this is more of like a value investing option where you put in the trade and you forget about it. But I'm sure once we get a daily, and even if a weekly closure somewhere down here, gold should have no reason to come back up here unless there was like an election scandal that goes worldwide, whatever the case may be. But I think that's what's going to happen. So if you have a chart for gold, if you trade gold, make sure you have an alert to 1847 and watch for price action on the weekly or daily time frame. And I'm basically targeting the high and low we made back in 2019 of around 1532. Okay, so that's what I have. I'm targeting the 2019 high of 1532. Obviously before we launched up. So gold, for the most part, I'm going to say 80% bearish, 20% bullish. But as we inch closer to the election, it looks like these shorts will be the more likely option. for gold. All right. Any pair recommendations? Let me know. I'm at 36 minutes. So any other pairs that you want insight on? Now's the time. I know there's a delay between what I say and the YouTube, so I'll give you guys a few seconds. But this is what I have. If you have a different opinion, let me know. I'm always open to that. I don't have a drink today. We have green tea. Okay, YouTube. Okay, there's someone on YouTube. Let me make sure someone on Discord is not left alone. 1 second. Alright, cool. Someone said NZD, and I'll actually do the Dow as well, because people are interested in Dow. So someone said NZD and Aussie. So let's take a look. But given that I'm so bullish on the dollar, you can already kind of forecast what I'm gonna say. Short. So let me remove the drawings really quickly, and that's a nice resistance zone right there. Yeah, that's really good actually. And we'll draw some support down here. So it looks pretty similar to GU, where it's a short but not really, because instead of just, this is a nice rejection by the way. Usually when you see this off a weekly resistance zone, price would most of the time actually go lower. But we had this huge rejection and price simply pulled back up. So for some reason, a lot of these other pairs, other than the euro, don't want to go lower. That's interesting because NZD is really correlated with euro. Same with Aussie. So look at the weekly time frame. You'll see, for the most part, we're not really doing much other than having a very slow uptrend. Right? We're going up, but I mean, goodness, this is gonna kill you. The boredom. I'm a bit shocked that we had this big rejection and we didn't go lower. In the past, usually when we have a bearish engulfing, price just sells off. That tends to be the case, but we're in different times, obviously. So let's see the daily. Yeah, so here you can see the uptrend, but it's the slowest, most annoying uptrend you'll find. I mean, it is creating new highs, new higher lows, new highs, higher lows, higher highs, higher lows. But my goodness, it is moving very slow because each high is maybe 10, 15 pips higher than the previous high. So this is 10, 15 pips higher than this one. This is around 20 pips higher than this one. Obviously, it's kind of boring. But what you can do is actually identify something here, and that's a ascending channel, and wait for a break, and then you can go short. So here's the top trend line. Here's your bottom trend line. Right, and then just wait for, and here we have some support down here. All right, we have some support down here. All right, and then wait for price to break out this ascending channel, and then wait for price to break this support and then go lower. All right, and obviously this will be a nice TP1 right here. These lows down here. All right, so here's your trade idea. Wait for the break. 0.65 thousand. What a nice psychological level. I'll mark that on the chart. Right, so wait for the break of 0.65 thousand, a nice psychological level on the daily time frame. Make sure it's a bearish closure, and then you can go short for this and this. So that's what I see. I mean, this is a slow death uptrend. If you want to trade it, I mean, you technically can. But the way the dollar is looking, I don't know. I don't feel safe going long, especially now with NZD being my base currency. So here's a potential setup. Obviously, these are all just rough kind of sketches. Once we know more on Wednesday morning, we can adjust it. But 2.71 R2R setup. Stop loss is in a good place in case we do dip down below and they try to want some stops. Our stop is high enough, and then we should make our way down to these targets. Our overall target is 0.62 thousand, and so watch out for that. I think that's what I have for NZD. Yeah, pretty decent idea, but there's gonna be some waiting. There's gonna be a waiting time for sure. Aussie, I think Aussie will look a bit similar to this. Let me move the drawings. Oh, Aussie looks perfect. Oh my god, bon appetit. This looks really good. Huh. Okay, this looks like a better short than Euro dollar does. Um, and you guys know I've been complaining about the choppiness of the markets, and I haven't been entering any trades on my swing account. So I have two accounts intraday. The other one's a swing account. This may be my first trade in a long time in my swing account. So we're in a downtrend. I was trying to show that we're in a downtrend, despite despite how ugly the downtrend looks. We're obviously in a sell-off from the higher time frames, right? And if you just look at recent price action, we had a moment of an uptrend, right, creating new highs, but then we popped back down into a downtrend. And now this pullback, it's coming at this previous high right here. So if I just label this, you'll see something. So price pushed up higher, and then it came to this high we made back in December 2018. Okay, and then it sold off. Now if you look at this monthly candle, this is beautiful. This is an inverted hammer that I'm always talking about, where you have a long to the top, a nice body, and short to the bottom. This is one of the most bearish candles you'll see. There is something we have to take note of. If you look at this faint line, that's where price is right now. If you look all the way to the left, we do have some support here. So we do need to break that support, otherwise we could be stuck in some trouble. So I'm just going to label that like that, like such, okay? So basically for Aussie, I mean, you could enter now. It's a high risk trade if you do, but that's all up to you. But I do think we will go lower. This is a nice pullback, and especially if you can close bearish below. If you can close bearish below 0.70 thousand, again another psychological level on the weekly or daily time frame, I think that's good enough for me to go short. I'll be looking to target, for example, this long wick as TP1, and then you can look at, for example, this as being TP2, and then, for example, this low we made back during the start of the pandemic as TP3. So there's your trade idea. Let's take a look at the weekly time frame. So weekly looks pretty good, looks pretty bearish. This was the uptrend we created. This was the last high we made. I flip to the left, that matches up with the December 2018 high. And then we've kind of created a downtrend. We're creating, lower highs, lower lows, lower highs. If we create a new lower low, that's what we need. So basically, if price can do us a solid, I'll try to make this a bit nicer. If price can do us a solid and close bearish like this next week, that is going to be the telltale sign we're going lower on the weekly or daily. Obviously, the higher time frame is the better, but this should take us lower. I'd be shocked if it doesn't. This looks very similar to gold in terms of how the price action looks. And we know gold and Aussie are correlated as well. So it's all piecing together when you look at the long-term perspective and the fundamentals. And then we can just look at a trade idea like this. So usually our stop loss is 50% between the two significant levels before. So this is our last significant level. This is the one before, so halfway. So in case markets try to run our stops, we will have to go through some drawdown. But eventually, if it comes in, tries to run stops, and it gets most of the traders out, it will eventually flood anyways. And this is a trade idea. So this is a huge mega swing trade. Again, this is for the rest of 2020. So it's not something that you'll be in and out of next week. It's we can take a trade next week here, then the week after we take a trade from here to here, and so on and so forth. But the R2R is ridiculous, 5.73. Even if you want something more short term, the R2R is still pretty good, 2.24. So both those scenarios are great in this trade idea. So that looks really good, I have to say. Yeah, as long as the dollar index keeps trucking up higher, this should happen. Okay, so a quick reminder: this is all predicated on the dollar index going higher, which we think will happen. But if these are all speculations about the election. So if the election, the result leads to a bearish dollar index, then all of this is thrown out the window and we reevaluate ourselves. But this is just a rough idea. On Wednesday, we can reevaluate. Even next Friday, when the dust settles, we can reevaluate. But for now, based on a bullish dollar, these are the scenarios we'll be looking at. All right, so I'm approaching 46 minutes. So if there's not any other questions, I'll do everyone a solid. So we go live at least twice a day, usually 3 times a day. There's 2 smart money sessions where our Trader Institute trader goes over institutional trading concepts. He teaches you how to trade like the banks. It's not like retail trading, and he goes live twice a day. And then I go live once a day with price action, more of a retail sense of way of trading. Either or is fine. You can choose whichever works for you, or you can use both. And we go live from Monday through Friday, right? And in addition, we provide signals, so that way our traders can learn and earn at the same time. And if you're looking to join this and you're looking to learn and earn at the same time, we have a lot of promotions going on. I will just share the monthly one for now. And so if you're trying to join these sessions and become a part of our community on Discord, here's our Discord community. We have multiple chat rooms. Here's a community always talking, always sharing data, analysis, all that good stuff. If you want to join this, all you have to do is go to our website, go to Forex Trading Room, click Get Started, get full access, fill out this form, and then click Next. This is for the monthly plan. If you use a coupon code FIRST50, you will get your first month off for 50% off. So your first month will be half of this number, which is $73.50. And then if you enjoy the service, you can obviously continue on. So this is a monthly subscription, and you'll get it for 50% off your first month using this coupon code. If you want something for the 3-month or yearly options, just leave us a message or chat to our live chat agent, and she'll help you out. Okay, so I hope you guys have a great weekend. Please be safe. If you haven't voted, make sure you vote. All that jazz. Make sure you're still socially distancing, and we will see you guys next week. So thanks for the pair recommendations for those that asked. Make sure you like, subscribe, and comment, and share this video with your friends, and I'll be that.